the ticks, and just about always there will be one index making a higher high and the other index will fail to confirm. Or else you'll have a high on the ticks, and then the next high up in the S&P, the ticks will make a lower high. But in particular, looking at the different groups, the sectors, the momentum stocks, the Dow, this principle of confirmation, non-confirmation, it's not only powerful in looking at reversals. And sometimes these things, you don't see them as they're happening. A lot of times you do see them after the fact. But they're powerful enough that you have confidence it's going to continue on in that other direction or that new direction. And we actually had that in the, I believe in the S&Ps when they were making their lows 2-3 days ago. If you looked at a short-term time frame, like a 10 or 15-minute chart, the S&Ps were making new lows, and the NASDAQ futures weren't. Okay, and it was real blatant. The NASDAQ futures have been momentum leaders pretty much for the last couple years. So it's not only important in looking at the reversals, but it's going to give you added confidence like once the thing does turn. For example, if the S&Ps start making new hourly highs and the Dow starts making new hourly highs or the NASDAQ futures, it should give you enough confidence that you practically feel like you could just pick up the phone and buy. Okay, if you want to be a little bit more sensitive than that, but it should make you feel good. Now you've got the right direction pegged. Now you've got conceptually that we've been at the lower end of the trading range. All the indices have started making new hourly highs, and now we're going to take out the upper end of the trading range. So you can use it in that sense. So these non-confirmation, confirmation, looking at the short-term continuation patterns and noting the impulse, letting the market tell you which direction it can go. Simple concepts, and they'll serve you well. And all you have to do is have a trigger to get into that trade. Be it, you want to put a buy stop slightly above the market, put in a low bid right around where it's testing, get in, and then manage that trade. These simple concepts will always keep you in the odds, in the favors, in the right direction. So the trade management, it will keep you mentally in the game, it will give you confidence, let it become automatic, and it'll all tie in together. This isn't how I wanted to end my talk, right like that, But, yes.
One thing, when I interviewed you a couple of years ago, you made a point at the beginning of the year, you approach trading a certain way, so you have a mental edge. I don't want to ruin things, but I think you remember you said how you were taking small profits in a trade.
Well, there's a couple things. This gets back to a very key factor, your ability to move on, forget about the last trade, always think forward, okay? So if you come into those markets every day, you should feel like today's a new day. Today's a clean slate, all right? That's the beautiful thing about this business, is that we wake up, we get a fresh chance every day to do better than the day we did before. Every month is a new month. Every year is a new year. You see, so much of trading, the attitude of how you frame it out, okay, is how you look at it. Do you want to look at it like, here's an opportunity to be better this week than you were last week, better this year than the year before? And what you're talking about is a principle at the beginning of the year. We can wipe the slate clean, say, gosh, here's a chance for me to really put in a good year's performance. And you start off, again, the management, taking one step at a time, one day at a time, one trade to slowly build it up. This gets down to the unit size and the leverage. Hey, if it gets it rolling, back to what these guys say. They say, all of them, theory is different from practice. The theory is so important because you have to have a model to go by, and the model is going to be an imperfect model. I mean, I don't want to make any comments about engineers if there's any engineers in this room, but I've seen more people with engineering backgrounds that want to stuff the market into a little black box. I see Murray laughing down there at that one. No, that want to stuff the market into a little black box, and it's tough. You have to accept all its imperfections and its limitations. You know, it will do freak radical things, and you know, every system that is successful, that stands the test of time, tends to capitalize on these aberrations in behavior. Okay, the long trend following systems, this one of the best performing systems out there, aberration based on large standard deviation moves, abnormal events telling you something unusual is going on out there. All right, so you have to have a model or a structure or a framework to work within, right? But on the other hand, that's where the little smarts, the street smart sense comes down, where Wyckoff would say, well, look at the market's little attempts to shake you out. Watch the market's attempts to fool everybody before it really resumes its plan. And so the practice part is going to differ from the theory, because sometimes we have to do what is going to make the game palatable to us. All right? And it's okay to make a feel-good trade. It's okay to get in there and say, I'm going to see if I can, take a penny out of corn. Who cares if you miss the main trend, I go in sometimes and I look for like little 5-minute grail buys or sales, It's like the kick of taking it, It's like, ha ha, I got one up on the market, Well, so I made $50. Who cares? We joke around. We call that a pizza party, So it's whatever keeps you happy in the game, in the groove. And for some people, they might approach it more seriously in the sense that they have their business plan and they're going to follow the plan. And this comes down to where it's knowing yourself. What is going to work for you? I have to know by now that there's probably 5 trades I'm going to miss for every 1 trade that I actually take or execute. I see the things all the time, but there's going to be a lot of times where it's like, I'm just burned out, or I'm tired, or I have to get into the kitchen and make myself a cup of tea, and I'm going to miss something. That's okay. You're on to the next trade. That's the great thing about the markets. There is opportunity every single day forward. You can never look at what you've missed. So whatever makes it palatable to yourself. Don't feel bad if you're starting out and you only feel comfortable staying in the market for 5 minutes and that's it. There's no big master game plan that says that you have to get in and